Quick question. Where is your money right now? In the bank. Wrong. Your bank doesn't have your money. It's not even required to. Let me show you the greatest magic trick ever invented. Here's what you think happens. You deposit $100. A serious man in a suit carries it downstairs, and it sits in a shiny vault with your name on it. Adorable. Here's reality. Your $100 became a number in a database. The actual vault? Nearly empty. Banks keep only a tiny fraction of deposits as real, touchable money. If every customer showed up today asking for their cash, the doors would close before lunch. And here's the twist. That's not a scandal. That's the design. The moment your money lands, the bank lends most of it to someone else. Meet Sarah. Let's keep it simple. You deposit 100, the bank keeps 10, and hands 90 to Sarah for her bakery oven. Now check your banking app. It still says 100. And Sarah's account says 90. Wait, 100 plus 90. That's $190, created from your single 100. Nobody printed anything. Nobody robbed anyone. A loan officer clicked a button, and 90 new dollars appeared in the world. And it doesn't stop with Sarah. She pays the oven maker. He deposits his 90. His bank keeps 9 and lends out 81. That person deposits again. Lend, deposit, lend, deposit. Your original 100 can become nearly $1,000 of money moving through the economy. This is fractional reserve banking, the multiplication machine that runs the modern world. And here's the number that breaks brains. Over 90% of all money in existence was created exactly this way. Not by governments, not by money printers, by commercial banks making loans. By the way, want to know how the bank profits from this trick? It's beautiful. The bank pays you interest for your deposit, 1%, if you're lucky. Then it lends that same money to Sarah, at 7. The difference, 6%, goes straight into the bank's pocket. It's called the spread, and it's the oldest business model on earth. Buy money cheap, sell money expensive. And remember, they're doing this with money they created by clicking a button. Your $100 earns you $1 a year. The same 100 earns the bank 6, on money that's mostly imaginary. Now multiply that by millions of customers, add mortgages, car loans, and credit cards on top, and you understand why every city skyline has more bank towers than trees. Oh, and the best part? When the bank's bets go wrong, there's a rescue plan. When your bets go wrong, there's a lecture about personal responsibility. Is this some new evil invention? Nope. It's a 300-year-old magic trick. Medieval goldsmiths stored people's gold and handed out paper receipts. Then they noticed something. Nobody ever collects all their gold at once. So they started lending out receipts for gold they didn't have. More receipts than gold. Banking was born, not as a service, as a confidence trick that happens to work. The suits got nicer. The trick stayed the same. Ready for the mind bender? Since banks create money by lending, every dollar out there is somebody's debt. Your salary? Someone's loan, somewhere upstream. And when loans get repaid, that money doesn't go somewhere. It vanishes. Deleted. Which means, if humanity ever paid off all its debts, most money would simply disappear. The economy doesn't just carry debt. The economy is debt, wearing a nice suit. Now you might think, fine, then I'll just hold cash. Paper money is real, right? Actually, yes. Ironically, cash is the only money you can touch that isn't somebody's bank promise. It's issued directly by the central bank. No middleman, no loan attached. But here's the joke. Less than 10% of all money exists as physical cash. If everyone tried to turn their bank balance into paper at the same time, there wouldn't be enough banknotes on the planet, not even remotely close. The rest is numbers. 90+% of quote-unquote money has never been printed and never will be. That's why huge withdrawals trigger paperwork, phone calls, and that suspicious squint from the bank teller. And ever wondered why your card has a daily ATM limit? Now you know. The system works beautifully, as long as almost nobody actually uses the exit. One tiny door, 8 billion people. You do the math. The whole trick works on one single ingredient: trust. You don't check the vault because you believe your money's there. But when people stop believing, they run. All of them, at once. It's called a bank run, and it kills banks in days. 1929, queues around the block. 2007, Northern Rock in the UK. 2023, Silicon Valley Bank died in 48 hours. The first bank run in history executed from smartphones. Nobody stole anything. People just asked for their own money. That's all it takes. So why doesn't this collapse every Tuesday? 2 safety nets. 1. Deposit insurance. In most countries, the state guarantees your money up to a limit, typically around 100,000. That promise alone stops most panics before they start. 2. The central bank, the bank for banks, stands ready to flood any drowning bank with emergency cash. The system isn't stable because the vaults are full. It's stable because someone very big promised to catch it. But here's the catch. When banks and central banks create too much money too fast, all those new dollars start chasing the same coffee, the same apartments, the same everything, and prices rise. Congratulations. You've just discovered where inflation comes from. The machine that creates money out of thin air is the same machine that quietly makes your money worth less. So what do you do with this knowledge? 3 things. 1. Your bank balance isn't money in a vault. It's a promise from the bank. Treat it like one. 2. Know your country's deposit insurance limit and stay under it per bank. 3. Banks got rich lending your money out at interest, which means the game is to own assets that work for you, not just cash that works for them. So let's recap the greatest trick ever invented. Your bank balance? A promise, not a vault. Most money? Numbers, born from loans, deleted on repayment. The whole system? A 300-year-old confidence trick. That mostly works. So next time someone tells you money doesn't grow on trees, correct them. It grows in banks, out of thin air. But here's the uncomfortable part. All that freshly created money is quietly eating your paycheck. Every single day. Your coffee isn't getting more expensive because coffee got better. It's because there's more money chasing it. How exactly does that theft work? And how do you protect yourself? That's the next video. Every way inflation secretly steals from you. See you there.